Today, we will work on one of the most common supply and demand trading strategy for day trading and scalping, rally-based drop and drop-based rally. In the first section, we will talk about how to determine the key supply and demand areas. In the next section, I'll show you how to identify the high quality and low quality supply and demand zones. In the final section, we will focus on two different trading setups and strategies for day traders and scalpers. We have so much to do. If you're ready, let's start. Welcome our free trading course, all about price action trading strategies and smart money concepts. Today will be a great day for the people who love supply and demand trading style. But if you look for more than supply and demand, check out my free course. You can find the links on Google Drive or directly from my website, which is in the description. And please, try to watch videos in order, otherwise it can be really confusing. Okay, rally-based drop and drop-based rally are just different versions of identifying usable supply and demand zones. It's extremely simple to identify these structures. It starts with a very strong and sharp rise, creating the first leg. Then the consolidation period creates our bases, order accumulation phase. This will be our supply area. Finally, the second leg, the big and strong drop right after the base. Rally, base, drop, RBD. As you can see in this example, a very sharp and strong rally happens. Right after that, the price stops and orders accumulate, creating the natural supply. Finally, you can witness a sharp and a strong drop. Very simple to identify. Let's check the drop-based rally. It is exactly the same concept, just flip everything. A strong and sharp fall. And then the price stops, orders being accumulated, creating our base. It is our general demand area. Finally, the very strong rally creates the second leg of the movement. Drop, base, rally. DBR. Let's see this example. Very simple. Strong drop. The consolidation phase is our base, our demand zone. Strong rally. Nothing too complicated. If you open charts, you'll see many of these structures around. While we learned the rally-based rally and drop-based drop, we also learned why these areas are very important. It is exactly the same concept, because these areas create the very commonly used price action structures. What are these? Order blocks, imbalances, breaker blocks, mitigation blocks, that could be quasi-model levels, that could be natural SR flips inside. Let's see an example. I want you to pause the video and identify rally, base, drop. If you look carefully, it is right here. This order accumulation creates our base and our natural supply area. You can notice the strong and high quality break here, leaving many imbalances behind and tradable areas for us. Let's check the inside of the rally-based drop. First, the breaker block, our failed order block. Right after that, you can see the general order block area. This is why these structures are really important, creating natural reaction points for us. Let's continue with the same example. This time, let's check the drop, base, rally. If you notice, there is a very obvious drop-based rally right here. A sharp drop, then a consolidation period, and finally the sharp raise. This order accumulation creates our natural drop-based rally demand area. You can notice the strong break right here that starts the rally leg. Identifying the order blocks is easy. It is right here. And right next to it, there is the breaker block. Finally, the obvious imbalance. All these areas combined create much stronger reaction points for us to trade. We also have natural checkpoints to distinguish the high quality and low quality demand and supply zones. Firstly, liquidity is a great concept to check. You should be checking the base carefully. Stop losses hunted or not. In the first example, many liquidity areas are not hunted. Price may easily pierce through this base and claim all the liquidity areas. In the second example, you can notice that some liquidity levels are hunted before the sharp fall. In the final example, there are many major liquidity levels hunted before the sharp fall, giving us a feeling of more safety before opening an entry. The second checkpoint is the same. Larger bases basically mean that more order accumulation. People are more interested in these levels and placing their orders. So, if the price comes back to these levels, there could be a great reaction. The last checkpoint is the high quality breaks in the second leg. I mostly care for the latest price action because the second legs are the ones that create the tradable areas for us, such as order blocks or imbalances. By the way, none of these are written rules anywhere. These are just my experiences. If you look at these examples, you'll notice something. Both rally-based drop and drop-based rally have their stop loss hunted before the second big moves. Basically, great swing failure patterns before the sharp moves. When I see this, it gives me comfort before entering a trade. Let's talk about trade setups to use in our daily lives. Before I start, I should state something. None of the trading setups and step-by-step instructions are written rules again. And you will not commonly see perfect setups in the real world. What we do here is just get as many confirmation as possible. Okay, let's see. Step 1. Identify a nice rally-based drop in the charts and draw a large zone. Do not worry about drawing a perfect zone. There is no such a thing. Step 2. Check the quality of the break. Is it strong enough or not? Step 3. Check the base. Are there hunted stop losses like swing failure patterns or not? Step 4. Let the trade setup form itself, creating internal liquidity points. This is an optional step. These internal stop loss areas will not be there all the time. Finally, identify the possible entry within the natural supply area. This could be reactions from order blocks, breaker blocks, or imbalances, and place your entry. Let's see an example. Let's go over this example slowly. Step 1. Identify the possible drop-based rally or rally-based drop. It's right here. Next, find the break that causes the sharp fall. Then check the quality of the rally-based drop. If you notice, there are strong stop-loss hunts here as swing failure patterns. Finally, I have a strong and natural supply area, our rally-based drop. Now looking for other possible price action structures. First, you can see the breaker block right here. Right after that, there is the order block which starts a sharp fall. The order blocks generally starts the second legs in these patterns. Now checking the structure, see the huntable stop loss points. Let's talk about entries. There are two breaks here. First, the market structure break and the break of structure. If you do not trust the first break, just wait for the second break. You can always use the premium and discount zones for better entries. Where to enter? I do not see a clear imbalance with the second break. Using order blocks is ideal. Now where the price can go? There is no significant imbalance down here, just some tiny ones. If you cannot find an imbalance, look for swing low points or liquidity lines like trends or equals. My entry would be like this one, very strictly 1R to 2R entry. I'm not being a 10R hero here, very realistic entry and exit. Let's talk about the stop losses. Identifying stop losses is actually quite simple. Every swing high point here is a possible stop loss level. As you can see, there are 4 possible stop loss points here. I'm not here to tell you which stop loss to take. The highest swing high is the least risky place to place a stop loss. At the same time, it reduces your reward. I'm really happy with 2R or 3R trades. But this is a personal taste and matter. I cannot guide you about what to do. Second trade type is extremely similar to the first one. However, sometimes the liquidity above or below the base needs to be hunted first before giving us a proper entry location. Let's practice and go over the setup again. Remember, practice and repetition is the only way to make things perfect. Step 1. Finding a nice rally-based drop or drop-based rally and drawing the demand zone from the base. Step 2. Check the base. Are there hunted stop losses like swing failure pattern or not? What is the overall quality of the structure? Step 3. Identifying possible internal liquidity levels and getting ideas about where the price may move. Finally, identify the possible entry. Price may want to hunt stop losses to fuel itself up before making a major move. These are generally quick hunts like swing failure patterns. And place your entry. We did a lot of examples on how to enter a trade before. Let's see another example. I specially selected this example because in real life, charts will be far from the perfect. Do not waste your time for finding the perfect shaped setups. Instead, try to read the charts and focus on what price can do. First, you can see there is a drop-based rally right here. It is DBR, but not a perfect one. You can notice the break right here. If you open lower time frames, it will be much clearer. I can see these things from the higher time frames due to my long years of experience. This will be our natural demand zone, drop-based rally, order accumulation zone. You see this time price hunts the stop losses, creating a nice swing failure pattern. And you should ask yourself all the time, non-stop, where is the liquidity? Where are the imbalances? Where can the price go? You can notice the equal highs above. As for entry, you can use the imbalance. However, I have a quiz for you. If you can spot the ROTE, reverse optimal trade entry in this chart, just type the word ROTE in the comments and send me your charts on Twitter. Let's see who remembers the reverse optimal trade entry. Okay folks, this is how you use rally-based drop and drop-based rally for day trading and scalping. These supply and demand trading strategies are commonly used in the day trading world, even for swing traders. So you can use it as a day trader or scalper, or even as a swing trader, to identify the key zones. I hope you subscribe to the channel and like the video. Thank you.